In this presentation, we're going to record a sale on account. In other words, we can also call that a sale on credit. In other words, the form that we're going to be using in QuickBooks will be to record an invoice. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. We're going to record an invoice. We've seen this in the past, so we're going to do it a bit faster here. If we go to our flowchart from the desktop version, we're going to be recording the invoice. The difference between an invoice and the sales receipt is that we have not yet received payment. This will typically happen when we do the work before we get paid and then basically bill the client or send out the invoice. And that means accounts receivable will be going up with regards to the invoice as opposed to cash or undeposited funds going up with regards to the create sales receipt. So let's go back to the QuickBooks desktop. I'm going to be down in the 100%. No zooming in because I want it to not mess up the invoice or anything like that as we go into it. We're going to be going to the send an invoice, so the new and then send an invoice. This invoice is going to Music Stuff Store, so we're going to type in Music Stuff Store, music, and there it is. Well, we have that one down below, so that's the one we're going to be picking up. The date is going to be 2/19, so I'm just going to select the plus button here to get to the 19th. The invoice number populates on its own, which is nice. We're going to then go down to the product. It's going to be an Epiphone Standard Pro, an Epiphone Standard Pro, Epiphone Standard. So there it is, an Epiphone Standard Pro, ESP. That's the one we're going to be picking. It is subject to sales tax because it's going to be an inventory item. And so there we have it, the $600. We're applying the sales tax. This is calculated in California of the 57. You could adjust the number to match our number with this see the math here, and you can override it if you so choose, if you want to match our problem and you have some other state for some reason. Then you can go down below and we have the total being the 657. So what's going to happen with this, every time we do the invoice, we're going to think, okay, invoice means accounts receivable is going to go up. Then the other side's going to go to sales, but sales is only going to go up by the 600 rather than the AR is going up by the 657. The difference is going to go to sales tax because the state made us collect $57 more to give to them, and that's a liability. And then the inventory is going to go down by an amount not on this form, but driven by the item. So the system knows what it should be going down by, but it's not on the actual form. We could look it up by looking at the inventory reports. And then the cost of goods sold is going to be going up, which is an expense account related to the same number that inventory is going to be going down by. Now let's record another one. So we're going to, instead of saying save and close, I'm going to select the drop down, which is more like a drop up. And we're going to say save and new. I'm going to make a save and new and go directly into another invoice that we will be creating. This one for Smith Guitars. So we're going to scroll back up top to the customer field. I'm looking for Smith Guitars. So SMI, do we have them? We do. There they are, Smith. I know them. They're a good customer. They're good people. So we're going to tab through this. We'll make the invoice date as of the 20th. And so there we have that. Then we're going to go down to the product and service. And this one's going to be an Epiphone semi-hollow body. So let's see if I can find that one. We want an Epiphone semi-hollow body. That's the one. It's a nice guitar. That's a good one. So we're going to say, all right, that's going to be the $400. It is going to be taxable. So we have the $400 down here. The tax being calculated at the $38. Again, you can change it if you want to, just for the purposes of the practice problem. What's going to happen when we record this? Well, it's an invoice. Accounts receivable is going to go up by the $437. Sales is going to go up by the $400, the amount we get to keep. The difference is the amount the state made us charge in order to give to them, which is the $38, which is going to go into a liability. Inventory is going to go down by some amount that's not on this form, but is known by the system because of the item that we put in. Cost of goods sold and expense is going to be going up by that same amount. Let's record it and check them out. So this time I'm going to say save and close instead of save and new. So I'm going to take the drop down, which is really kind of a drop up, and we're going to go to save and close. Then we're going to open up our trusty trial balance, and we'll do a quick review on this with the trusty trial balance. So it didn't close. It saved it, I believe, but it didn't close it, I don't think. Anyways, I'll close it here. Then I'm going to go to the reports on the left. We'll type in trial balance. That's what we want to look at now, the trial balance, which is trusty. And we'll go into that. And then we're going to change the dates up top. We're going to go back up top, changing the dates from 01/01/20 to 12/31/20, January through December 2020. Run that report. Then I'm going to close the hamburger up because I don't think we need to do anything else. So we don't need to duplicate the tab this time. I'm going to hold down Control, scroll up a bit to get to the 125. That's where I like to be. And then the accounts receivable, just to review this, let's go into the accounts receivable. We have 2 invoices that we put into the AR now, increasing for music store stuff and Smith guitars. There's the 2 invoices for the gross amount or the total amount of the invoice. Let's go on back and go back. The other side, I would think of going to then sales, which would be on the income statement, which is on the bottom of the trustee trial balance. There's the sale. We want to pick up the sales for the products. So this is going to be the sales item we need. If we then scroll down to the bottom of that transaction detail, we see those 2 invoices once again. However, this time for a bit less of an amount, the amount that we actually charged for them, the sticker price for them, not including the sales tax that the state made us add to the sticker price. Then we're going to go back and look for that added amount that the state made us add to the sticker price. That's going to be in a liability, which is up top or kind of in the middle of the trial balance. It goes assets and then liabilities. And there's the 424.40. If we select that and scroll back down, we're going to see those invoices once again and the sales tax related to them broken out into their component parts. Going back up top, we're not quite done yet. We're pretty close, but we also know that the inventory went down because we sold a guitar, and that's the stuff we sell. That's our inventory, and it went down. So we're going to go to the inventory assets, go into the inventory assets. Scrolling back down, we see our 2 invoices once again. They are going down, not by any amount that we recognize. I didn't see that on the invoice at all. It's not on the invoice, but it is driven by the invoice. The system knows what it is because we entered the service items related to them. Scrolling back up top, what's the other side to that inventory going down? It's the cost of goods sold and expense account going up. The cost of goods sold represents us consuming the inventory in order to generate revenue. So we're going to go back down. There's the other side of those, reflecting these expense accounts going up. What's the effect on net income? The difference between the sales, the sales that we recorded increasing, and the difference in the expense, cost of goods sold increasing, is going to be the net effect on net income.